for the first time ever, Saudi Arabia is selling bonds, essentially government IOUs, to international investors. And we now know how much it's raising, at least $17.5 billion. Now, that is the biggest ever bond sale for an emerging market. And the Saudis are in need of loans because the price of its biggest export, oil, has fallen sharply over the past 2 years. Now, it's just part of the kingdom's Vision 2030 plan to diversify its economy, which also includes selling a 5% stake in its oil company, Saudi Aramco, which would raise an estimated $100 billion. In addition to this, Saudi Arabia wants to privatize entire industries and bring more women into the workforce. The plan also includes introducing pilgrimage fees for visits to Mecca and building Western-style desert theme parks to attract more tourists. Now, TRT World's editor-at-large, Craig Peters, has lived and worked in Saudi Arabia, and he does join us now from Paris. Craig, this is a record-breaking bond for an emerging market. As with you and I, if we were to go to the bank and people were to lend us a lot of money, it does show perhaps that they are confident we can cope with the debt. So is this a strength or weakness, a sign of strength or weakness, do you think, Craig?
It's a sign of both. Like everything in the kingdom, it's a hall of mirrors and duplicitous. People are investing in this bond issue because oil remains the engine of Saudi Arabia. The paradox is the engine's not going to work very much longer with the oil. People are not investing because of the wonderful dates that are produced in Hafr al-Batin. They're investing because there will always be a market for oil. And the desperation side of this is this increase in the Hajj fee, which was $93, and it has skyrocketed to a whopping $533 for first-time pilgrim, or for anyone who's a second-time pilgrim. First-time pilgrims get in for free.
Right, okay. Craig, this is all part of the Vision 2030 plan, which we mentioned a little earlier. It's really the Deputy Crown Prince's project. Is everyone on board in the kingdom, or is he facing resistance?
He is facing resistance. The short of it is this. Deputy Crown Prince Salman, who's 36 years old, is now in a battle with Crown Prince Nayef, who's 57 years old, and the heir apparent to King Salman, who will be 81 years old in December. Now, whether Vision 2030 is 2020 or myopic or anywhere in between hinges on who wins that particular wrestling match between the two princes. On top of that, even if it does happen, it's going to demand a change in attitude and some would argue belief systems, all of which is dictated by economic reality. The Vision 2020 is predicated in the West, is predicated on the notion that the next Saudi king is, who is a theocratic monarch, absolute monarch, will actually be the next chief executive officer of Saudi Arabia. And is he going to operate the future of Saudi Arabia like a theocratic monarch, or is he going to operate the kingdom as a CEO? That's the question that investors want an answer to, and they're not getting it yet.
Okay, Craig, thank you very much for that so far in Paris. We are going to just look now at the IMF report that warns that all the Gulf states are over-reliant on oil and need to diversify their economies urgently. Now, the IMF forecasts the Gulf states' overall gross domestic product would expand by just 1.2% in 2016. That's the lowest level since the financial crisis of 2009. Now, oil prices are expected to remain low at $50 to $60 per barrel over the next 5 years. That's a far cry from the $140 the Gulf was previously able to command. Now, the IMF warns that the 2 million young people will be entering the labour market in the next couple of years, so they need to be employed in other industries other than oil. And there's never been more need for a vibrant private sector. Here's the IMF.
Countries in the GCC need to adjust to a reality where their income is going to be substantially lower than it used to be before 2014. all of them have, in one way or the other, to try and cut back their spending over the next 5 years and to find ways of raising revenue outside of oil. Saudi Arabia's measures recently to try and contain the wage bill. Similarly, the measures that have been taken by some other countries like Oman to look at freezing employment in the public sector are all ways to address this issue of how to bring their budget into balance.
And Craig is back with us from Paris. You heard that soundbite there, Craig. I mean, Gulf Arabs are not used to cutbacks, are they? And is this going to be a bit of a shock to the system?
It's going to be more of a shock to the system. And the antidotes that are being offered so far, at least in the kingdom, they created a Saudi Entertainment Authority to try and create new businesses. Two of the chief businesses that they're creating are monster truck rallies and bringing professional wrestling to Saudi Arabia. These are the kinds of solutions that they're looking at. Again, it all goes back to, can Saudi Arabia loosen up its strictures to really open the kingdom up to Western markets and lure people to Saudi Arabia for tourism and adventure or even cultural tours? Right now, that doesn't exist, regardless of what the Saudis might say publicly.
Okay, Craig Kapitas in Paris, thank you for that.